Hello, I'm Hickey from interest.co.nz and welcome to a special report from here at the Reserve Bank in Wellington, brought to you in association with the BNZ. Today the Reserve Bank has released its 6-monthly Financial Stability Report. This is its assessment of how safe the world's financial system is and therefore New Zealand's financial system. It has a look around at what's happening in global markets. It has a look at the strength of our banks, what's happening with lending and with borrowing in New Zealand, and says how safe and healthy our financial system is. And right now, it's pretty healthy. Unlike the rest of the world, where things remain fragile. And the Reserve Bank is keeping a close eye on that and how it will affect our bank's ability to fund our relatively high foreign debt. Now, at the moment in Europe, there is real turmoil around the euro and the sovereign debt crisis there. And the Reserve Bank says that the term debt markets are currently on ice. What it means there is that our banks aren't able to go into those long-term bond markets and issue bonds there. Now, this is important because the Reserve Bank and the banks themselves are looking to lengthen the maturity of their funding. That means instead of going out as they did in the past and borrowing lots of hot money from the wholesale markets, 90-day type money, now they need to go out and borrow longer term from international investors and from local investors, mums and dads here in New Zealand. So it's good to keep an eye on what's happening in Europe, because if those markets freeze up, then that'll make it more difficult for our banks here to borrow for longer terms, and that's going to put them under a bit more pressure. And the Reserve Bank's Deputy Governor, Grant Spencer, made that point when I asked him about the core funding ratio. Remember, this is the Reserve Bank's rule, which says the banks must currently fund about 65% of their lending from more mature sources, those long-term debt markets, and also mums and dads here in New Zealand. That's why term deposits have been relatively high, compared at least to the official cash rate in recent months. The banks are having to compete hard. And the Reserve Bank says it wants to increase that core funding ratio from 65% to 75% over the next couple of years. And the Reserve Bank said it would keep an eye on how things are going globally and locally with funding costs and with lending as it reduces that rule up to 75%. It suggested that if things got really tough, it may not force the banks up to that full 75% in an awful hurry. Meanwhile, the Reserve Bank is also keeping an eye on business lending. It says there has been a slight tightening of bank credit standards for business lending in the last few months. And in fact, over the last couple of years, there's been quite a tightening. It says as the economy recovers, it wants the banks to keep lending to those businesses and help fuel their recovery. And it's given a slight hint, a bit of a warning, that it wants the banks to keep lending to businesses, because many of them face tighter credit conditions, higher interest rates relative to the official cash rate, and that's keeping their investing under control. Although it has to be fair, the demand isn't really there from businesses. They're being very cautious at the moment too. And finally, the Reserve Bank says that households who have been relatively indebted in the past are saving more, that they tend to be repaying their mortgage at a relatively higher rate than they have in the past, and households are under slightly less pressure because interest rates have fallen in the last couple of years. But that pressure will go back on as interest rates start to rise. The Reserve Bank was careful not to say what it's going to do with the official cash rate on June the 10th, when it has the next chance to increase it. In fact, they were quite pointed when asked what's going to happen with the official cash rate given what's happening in Europe. And Reserve Bank Governor Alan Bollard said, no, this is not the place for it. And he says wait until June the 10th. That's when most economists expect the Reserve Bank to increase the official cash rate from 2.5% it is now, perhaps to 2.75%. If it's not June the 10th, then it'll be later in July. So there we have it, a special report from Hickey here at the Reserve Bank in Wellington from interest.co.nz, brought to you in association with the BNZ.